I do think we could have a big week. If we get some follow through from what happened on Friday, more downside in the stock market, maybe more downside in crypto, and a big up move in gold, in the mining stocks, which I think are still really cheap. I mean, they were up on Friday, but not nearly as much as they should, given the news that has come out that really cuts against the narrative of a strong U.S. economy. We have a weak U.S. economy. We have stagflation, and that is the best possible environment for gold and silver, the worst environment for the dollar. And so those two should combine for a fabulous environment for the mining stocks.
The latest jobs report stripped away the illusion of a resilient labor market. Unemployment climbed to 4.2% in July, mainly due to a decline in household employment. At first glance, that may seem like a minor shift. Still, it's happening at a time when the economy is already under strain from ongoing trade disputes and tightening immigration policies. The surface numbers look manageable, but the underlying data tells a different story. PeterSchiff, chief economist at Euro-Pacific Asset Management, highlights a detail that most people overlook: the downward revisions to May and June. These weren't minor corrections, they were major misses. When the initial figures were released, markets reacted as if the economy was strong, expecting more rate hikes from the Federal Reserve. Gold sold off on that assumption. But if the actual numbers had been published from the start, the reaction likely would have flipped. Gold wouldn't have dropped, it would have jumped. That shift played out on Monday. Once the updated jobs data finally hit the tape, gold surged. It broke out of a descending technical channel and closed at $3,363 after hitting an intraday high of $3,363.60. The weak labor figures erased any remaining expectations for further rate hikes, pressured the dollar, and prompted money to flow into safe haven assets, such as gold. Schiff isn't alleging manipulation, but he is drawing attention to the flaw in how economic data is built. The issue isn't that the numbers are intentionally distorted. It's that the models used to generate them are fundamentally disconnected from real-world conditions. Employment, GDP, inflation, these are all shaped by formulas that smooth out short-term volatility, revise past errors, and often deliver a cleaner picture than what's happening. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Gold was down $20 on that beat. If they would have reported 14,000, gold probably would have shot up by a lot more than $20. It might have been up $50. In fact, gold was up yesterday. It closed up $73 on the bad news, back above 33.60. But I think gold would probably already be above 3,500 had we got the correct jobs numbers right off the bat, because all gold really did was recover ground it never should have lost, but it should have gained a lot of ground. Now, I think it's going to recover that ground pretty quickly. I think now that people are going to realize what they should have realized a long time ago, that we have a weak labor market. And of course, a lot of people are thinking that now this weak labor market is going to give the Fed cover to cut rates in September. And I'm going to get into that in a minute. I just want to talk a little bit more about these jobs numbers, because after the jobs numbers came out, of course, Donald Trump was very unhappy with these numbers. And about a few hours later, I read on the tape that Trump fired the woman who is in charge of the Labor Department where they come up with these statistics. He fired her for being incompetent, right? For doing a lousy job. Now, initially, I was wondering, what exactly is he firing her for? Is he firing her because the last 6 jobs numbers were all off and they all had to be revised down? So is that why he's firing her? Because, she's doing such a bad job that they're so far off every month and they have to go back and they have to revise it? No, that's not why he's firing her. He made it clear. He came out and said later in the day, I'm firing her because today's jobs numbers were rigged. I don't believe these numbers. I don't believe these revisions. He's saying that he believes that the reason the jobs number missed and the reason that the last 2 jobs reports were revised down by a record number of jobs was just to make him look bad. Right? So the Labor Department, right? And it's, of course, the person in charge doesn't compute these numbers. I mean, maybe she gets them. There's all number of people. There's lots of people. I forget how many, 40 people maybe I read that work on these numbers. Now, look, I think it's a waste of time. Just fire them, right? And I think the numbers are so inaccurate that what's the point of wasting all this money on all these government pencil pushers to come up with inaccurate numbers? Look, ADP comes out with a number. That's good enough. I mean, if the markets want job statistics, let private companies supply them. I mean, I don't like the government anyway supplying economic data because I don't trust the government, because the government is biased. Again, it's like asking the mafia to compute crime statistics. Obviously, the mafia is going to say, hey, there's no crime. We don't need any cops. See, look, nobody's getting robbed. There's no extortion. There's no racketeering. There's no need for any police. Of course, right? The mafia, is not going to be unbiased, right? Or it's like, letting kids grade their own report cards. Oh, my kid got straight A's. What do you know? Of course, right? If the kids grade their own report cards, what do you think? They're going to fail themselves? So you need an objective person. So I think we should fire everybody. He shouldn't just fire the head. Fire the entire department. Shut it down. We don't even need it. But I digress on that. I don't want to, go down that rabbit hole right now. I want to stay on the jobs numbers. But so Trump fires her because this is rigged, which is impossible for her to rig it. It would have to be a conspiracy among everybody. And again, when I have been saying the numbers were bad, I didn't say it was, a conspiracy to fudge the numbers. My critique has always been that the methodology is wrong. The way they calculate these numbers, that's the problem. And maybe they've been designed to be wrong. It's not a conspiracy to fake them. Nobody is, getting the numbers and they're low and they're saying, oh, let's just, lie and make them good because we want to make Obama or Biden look good. Oh, we want to make Trump look bad. So let's erase this good number we got and substitute it. They couldn't get away with that. But if the methodology is wrong, then it's garbage in, garbage out. It's the same thing with GDP. It's the same thing with inflation, except in the other direction. So the unemployment numbers are lower than they really are, but the number of jobs created is higher. GDP is always higher. In fact, we got 3% GDP that came out on Wednesday, stronger than expected. Trump was talking about how great that was. Oh, look, 3% growth. Well, why is that number real? Right? And in fact, all the jobs reports that came out in the past that were wrong, but initially beat the estimates, Trump believed that, oh yeah, those statistics are accurate. But when it's a bad number, oh, it's been rigged. And of course, if the head of the Labor Department was really trying to make Trump look bad, why did she wait until August 1st to do it? Why did all these other reports, in fact, every single jobs report that has been released, I think, since Trump was president, was a beat. Now, they were all revised down to a miss, but the original reports were all beats. Why didn't she rig those? Because those are the ones that Trump was able to go out and brag about. So if there was a conspiracy to make Trump look bad, why didn't they do it earlier? They just decided they wanted to make him look bad after all these months of making him look good. So it's ridiculous. I mean, talk about shooting the messenger. That's what Trump does. But again, this is all part of the Trump show. I've been explaining this. None of this is real, right? So Trump is confronted with bad economic data. And rather than acknowledge that it's bad, well, let's just fire the person who compiled it because the numbers can't be bad. And that's what he said. He said, the economy is great. We are booming, right? Well, how does he know we have a great economy? Because he says so? I mean, maybe Trump just believes that he's so good at whatever he does that the fact that he is president means we can't but have a great economy because he's the greatest president ever. And so we must have the greatest economy ever. I mean, that's what he believes. In fact, and I'm going to get into tariffs later, but, he's talking about how we're getting rich on tariffs. I mean, how do you get rich? By taxing yourself. I mean, does he really believe that the road to riches lies in taxation? That the more taxes we have, the richer we're going to be? It's actually the opposite. We're not tariffing ourselves into wealth. We're tariffing ourselves into poverty because tariffs reduce free trade. And the freer we are, the more prosperous we are. So we don't increase prosperity by increasing taxes. We do it by decreasing the size of government so that we can reduce taxes. But again, I'm going to get into that. Let me stick on the jobs again before I jump ahead of myself.
The U.S. tariff strategy isn't about tough negotiation or clever diplomacy. It's a tax. Plain and simple. Tensions with India are now intensifying. Trump's proposed 25% tariffs on Indian imports have derailed ongoing trade discussions. What once appeared to be standard diplomatic posturing has evolved into genuine pressure. Negotiations have stalled, and the rift is spilling over into broader geopolitical dynamics, especially within BRICS. The U.S.-India trade relationship is under stress, and there's no clear path to resolution. PeterSchiff cuts through the noise. He argues that tariffs aren't just being used as a bargaining tool, they're being locked in. Even when other countries reduce their trade barriers, the U.S. doesn't follow through with reciprocal rollbacks. That hope of a swift reversal, it's a fantasy. Tariffs are now averaging 18% across the board, the highest in nearly 100 years. Businesses are absorbing the extra cost just to avoid hiking prices further, which means tighter profit margins, less room for investment, and fewer new jobs. Consumers are already under pressure, and now they're being pulled deeper into the fallout of a prolonged trade war. It's not an abstract issue, it's visible in everyday spending. And while this unfolds, the Federal Reserve isn't stepping in. Jerome Powell is holding rates steady, insisting there's no urgency to cut. Inflation remains elevated, while the labor market appears stable on the surface. However, beneath the surface, warning signs are piling up. Let's get back to the interview.
The weak jobs numbers, now if Powell comes back and says, the economy wasn't as weak as we thought. But that also undermines the Fed, because is the Fed really just putting everything on these government numbers? I mean, why do we have all these economists that work at the Fed if they just look at government numbers? If they just take government numbers, as gospel, and they just build all their policy on these numbers. I mean, I said that before. I said, how could you base policy on numbers that you know are wrong, that you know are going to be revised? So for Powell at last week to talk about how strong the economy is, how strong the labor market is, and then at the very next press conference say, hey, the labor market is not strong, it's weak. So we got it wrong because we believe the government. Well, don't you have your own people, right? Didn't you know the government got it wrong? How could you, but there is some excuse. But given the ground that Trump laid out, or Powell rather, his criteria about inflation and making sure that these tariffs don't end up causing higher inflation, which again, they're not going to be the cause, but they could certainly be the excuse that the Fed could use. But I know that prices are going to be moving up as more of the importers start to add on these tariffs. Knowing that their customers are broke, some of the tariffs may not be passed on to the customers. They may be eaten by the businesses. But these are American businesses that are going to have to suffer, right? Their profits are going to be reduced by whatever portion of the tariffs they absorb. And so what negative impact is that going to have on the economy? If companies have lower profits because they have to eat some of the tariffs because their customers can't afford to pay them, well, they have less money available to make capital investments, to grow their companies, to hire more workers. So the tariffs are going to have a negative impact on the economy, especially on the consumer part of it, right? Because that's where they're focused, right? We're making consumption more expensive, right? These are taxes on consumption. They're excise taxes. Now, I prefer these taxes to income taxes, but it's not like we're getting rid of the income taxes. We're just adding the tariffs. I think the average effective tariff rate now is like 18%. This has been the highest rate since the Smoot-Hawley days that preceded the Great Depression. But of course, back then, Americans didn't have Social Security taxes to pay. We didn't have a payroll tax. We had an income tax, but it was only for the very, very rich. Now you have middle-class Americans paying the payroll tax, paying the income tax, and now they're paying these super high tariffs. And that's still not enough because we still have these huge deficits, which means Americans are going to pay the payroll tax. Could you imagine what if a governor of a state raised the sales tax way up and then talked about how rich the state was getting on sales tax revenue? Would anybody buy that? Of course not, because the public knows they pay the sales tax because the sales tax is written on the price. You go and buy something and the sales tax is added on. The tariff is not added on. It's built in, but it doesn't mean you're not paying it. Whenever Trump talks about tariff, just talk about a sales tax, because that's basically what it is. It's the same type of tax, right? If you read the Constitution, duties, imposts, excises, all their indirect taxes, right? Tariffs fall in the same category as a sales tax, right? So when the government puts a tax on liquor, federal government puts a tax on cigarettes, federal government puts a tax on anything, same as a tariff. That's what it is. But so the degree of economic ignorance in the administration all the way to the top, right? Because everybody is singing the same tune when it comes to tariffs. And I still see some of these people defending Trump that I know are free traders, and I hear them on TV, and they try to say, well, yes, I believe in free trade, but I really like the way Trump is using tariffs as leverage to get these great deals. What great deals? He hasn't gotten any great deals, and he's not using the tariffs as leverage because the tariffs are still there. We're imposing all these tariffs, even with countries. When countries agree to go to zero tariffs on American goods, right? No tariffs at all. Not that they had high tariffs before. Maybe they were 3%, and they went down to zero because Trump was able to leverage them to go to zero. Trump didn't say, okay, we'll have no tariffs on your goods coming into our country. Trump is at 15% or 20%. So the tariffs are not just leverage. They are being imposed. Trump likes the tariffs. He wants the tariffs. He doesn't just want the threat of tariffs. He wants the reality of tariffs because he doesn't understand them. And so we're going to get them. Thursday is going to be a big day, or this week, and I think the markets are going to continue to weaken. The dollar should lose the ground that it gained. And, I think the markets are going to be disappointed if we don't get a rate cut in September. But I think we're going to keep getting bad economic data. We're going to keep getting worse inflation data, even though it's not as bad as it should be because the numbers are wrong. In fact, don't just fire the gal who was responsible for the unemployment numbers. How about the one that's responsible for the inflation numbers? I mean, they've been getting those wrong for as long as I can remember. I mean, fire everybody who's doing that. And the same thing with the GDP. I do think we could have a big week. If we get some follow through from what happened on Friday, more downside in the stock market, maybe more downside in crypto, and a big up move in gold, in the mining stocks, which I think are still really cheap. I mean, they were up on Friday, but not nearly as much as they should, given the news that has come out that really cuts against the narrative of a strong U.S. economy. We have a weak U.S. economy. We have stagflation, and that is the best possible environment for gold and silver, the worst environment for the dollar. And so those two should combine for a fabulous environment for the mining stocks.
Schiff sees the setup. The Fed can only wait so long. If rate cuts are delayed too much, the damage could be severe. Equities and crypto are particularly exposed, but gold and silver are starting to move. The mining sector remains undervalued, and demand for physical metal is growing steadily. If the economy enters a stagflationary phase, characterized by slow growth, persistent inflation, and a weakening dollar, then hard assets are where capital will tend to flow. While official data tries to maintain the image of a steady economy, capital is quietly flowing in a different direction. Businesses are cutting risk, not taking on more. Consumers are watching prices, not splurging. Investors are shifting toward assets that don't rely on optimistic forecasts or policy fixes. The longer policymakers hold their stance, the clearer it becomes. Markets aren't waiting for a green light. They're already adapting to a world where friction is constant, costs are sticky, and trust in the system has limits. When the gap between what's reported and what's felt keeps widening, how long before confidence shifts permanently toward tangible value instead of paper promises? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.